Hey guys, YouthFuels here. Today we're going to be going over my portfolio for the week. First of all, there was a lot of earnings this last week. Some ended in very bloody seas, and some ended in very luscious green mountains. As you can see, Meta is down 12%, so they very badly got wrecked during their earnings cycles this time around. And Amazon and Google, where is Google? They did pretty well. Apple did pretty decent as well. There's a few announcements there, but yeah. So overall, the portfolio went pretty decent this week, I'd say. So if we take a look at the stats, we can see that the M1 Finance was up 0.1%, and that was mostly due to those earnings that I was talking about. We have the Composer portfolio up 0.41. Oh, sorry, I'm sorry, I was looking at the wrong number. That was for the Friday. So for M1 Finance, 0.61. The S&P 500 was 7.72. We have, and then Composer up 1.24. Webull up almost 12%. This one was very interesting. They had earnings, and they actually somehow beat earnings. So that was what Friday was, bloodbath for, because it went up quite a bit during Thursday. And then, after market, they had their earnings, and then it jumped quite crazy. So, but yeah, we did pretty good. I'm very happy with how the Composer portfolio is doing. Obviously, I've been doing a lot of work on trying to get this up to date to how, having a really solid portfolio in terms of risk management and also high returns. So, we're doing pretty good there. We started this on the 5th of October, so almost a month now. And I also added this. I don't remember if I had this last video. I don't think I did, but I can select here, and we can see technically we started this portfolio in October, or this new portfolio for Composer in October, which we're up 4.21% from there. Just off of that, if we actually just look at the last 30-day column here, or row here, we can see that Composer is doing quite well. I mean, so is the M1 Finance portfolio, but that's just luck at this point. We just had a good selection of stocks. So you compare that to SPY, obviously, it's a big difference. So, yeah. Going into each of the individual portfolios, let me unlock this real quick. We can see Webull is sitting at $310, so our open P&L is only minus 76% now. One day, guys, this will go all the way up, and hopefully we'll be able to shut down this position. As soon as it breaks even, I'm probably going to sell out of it. I guess it depends on when it is, because typically MSTR has pretty heavy price swings to the point where we could be going up 10% in one day, but same as being true on the other side. We could be going down 10%. So outside of that, if we go to the M1 Finance portfolio, we can see here how I don't know what that's about. Huh. I don't know what this is, actually. I don't remember buying this. I'll have to review that in a second. If we go to last week on here, you can see here that if we sort the best one that we had was semiconductors. The main one from there was NVIDIA, as always. Then we have technology. The best performance or the gain there was from Google, and Microsoft a little bit down. And we had consumer discretionary, and the best one there was Amazon, which is pretty nice, almost 9%. Crazy earnings, honestly. Like, typically earnings do well, but I haven't seen earnings do like almost 10% on every company in a while, so that's crazy. Lowest ones we had were AMT went down. That was like earnings, I think, on Tuesday morning. We had industrials. The lowest one there was Honeywell, also earnings. And last but not least, we had utilities, which the lowest one there was NextEra. I believe I think Next Era and Southern Company had earnings this week or last week. So that kind of explains that. But we had a lot of earnings, really. We did have a lot of earnings. So I really don't know what this is from, but if we take a look here, we can see that, let's see, since last week, I don't think we've had anything. I guess there's this position activity thing, which we just got added shares. Again, I'm really confused where this came from. It's the first time he's seeing it. So, I don't know what that's about, but I guess whatever. That's $38, apparently. So, interesting. If we go to the holdings for here, we can see if we go to unrealized gain. Oops, I'll get to there in a second. So AMD, AVGO, and Google are topping our things there. Pretty good. And then on the opposite side, AMT, Souls, which again I didn't purchase myself. Costco. So I guess AMT, Costco, and PG. Costco or PG also had, I think, earnings on Friday morning. Again, a lot of these had like MasterCard and Visa, but you know, the fact that AMT is down quite a bit is a little bit annoying, but it's such a small percentage of our portfolio. It's honestly fine. So, let's see. Oh yeah, that's what I was gonna say. We're up 17.42% since starting this account, which is pretty cool. Obviously, that includes the whole dividend period, but overall, not that's actually still pretty good considering that. So we haven't even been in most of these positions for a full year at this point. We've only started, I think, in March for most of these positions. So pretty cool. We do have dividends coming up this month. You can see here the next one is Apple. I don't know why these are so delayed. Guess we'll just take a look at there. We have AbbVie, Morgan Stanley, and Procter Gamble, and probably some other ones. And then in December we have quite a bit as well. So overall, I think that's going to be a total of almost $70 in dividends, which is pretty cool. But yeah, moving on to Composer. Portfolio is doing very good. Tracking it very well. If we go to IC stats real quick, you can see we're up 3.3% since starting that position. And that's technically maybe right. I don't actually know. These are derived from a lot of stats that Composer kind of gives us somewhat willingly. It's all over the place. Their API is pretty bad. But you can see that we're still on the risk score of 7, which is pretty nice, and it's tracking pretty well. The correlation and the tracking error have actually gone down, which is a good thing. So overall, we're doing pretty well. Now, I did actually purchase, so I had some other ones that you guys saw last week. I've been holding those for probably a couple weeks now at this point. I sold out of those because those were showing moderate risk portfolio or risk scores. And I wanted to go into this one, which is really interesting. It goes back to 2007, like my one here, but you can see that I guess I have this one with that. So let me show that off. So you can see that the annualized rate of return for this one in the same time period is 50%. That's weird. This was showing 60% yesterday. Oh, okay. Something. Oh, it's because of TQQQ. I was like, that's weird, but that's actually something good to know. But here's what I'll do. I'll just show these two off. You can see here that ours goes to 49.2%, while ranked in ICM signals, safe sectors, V4, blah 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 blah. Yeah, very long name. This one goes to 62.5% in the same backtest. The Sharpe ratio is quite a bit higher, which is super nice. The max drawdown and the standard deviation are actually really close to each other. So there is something to look at. So I'll be testing this one out Um, as I do, I'll basically just be holding this until I can get a good sense of it using this tool right here. So over the next week, I'll be determining whether or not this is actually a good thing to hold and whether or not it tracks its backtest well. Because if it doesn't, then it's literally not worth buying in my books. So I'm actually curious though, if we were to add back TQQQ and try to fix this, because there's something that's interesting here is this went down around 12%, this went down about 8%, right? So in the whole grand scheme of things, like this one might actually be, I don't want to say it, I don't know how I'm trying to describe this, but basically what I'm trying to say is if we lower the amount of years and our BF is actually doing like more consistent to or consistently closer to its annualized return, that's a good sign because that means that not it's not super dependent off of the year. Now we can get kind of crazy with things and look up quant stats tear sheets with us and see on like a month by month return on how it actually does. But what I'm gonna do, like I said, is just determine how close it is to its backtest. And through that, you can kind of get a real good sense of whether or not that number of like 62% or even 50% for that matter is worth it. So we'll see. Ideally, in a perfect world, if this is actually tracking around the same or hopefully even better than the BF portfolio, then I might as well swap it out for this. So yeah, what's interesting is if I come over here, let me set this up real quick. So I have these two portfolios loaded in my Maestro, and what's really cool, now it's not extremely like it's not one-to-one to Composer, just because they have to use separate tools to grab these. But if we look at BF 49 and look at this column called percentage of returns, you can see the majority of our returns are coming from two things. One is going to be emerging markets, and the other one, which is really most where it comes from, is from the QQQ or the 2x leverage QLD slash QID. You can see that most of these are going to be focused on that either technology basically or emerging markets. So but you can see just the first two portfolio or just the first two holdings here are actually contributing more than anything else, which is actually a bad thing in some cases because if we were to rotate into a market where technology does not do very well, this could actually suffer quite bad. And the reason I bring this up is because these can only backtest back to 2007. If they were to be able to be back testable back to 2000 or like the .com bubble, that might give us a better idea on how these might do. But it's a lot of work. It's possible technically with something like Testfolio, but it's a bit harder. Now with the range concise EM signals, you can see it's a similar story. It's actually this is a QLD. The most of the returnings are coming from EM and EUM, but it's a little bit more spread out. So there's this index called, I don't know what's going on with Google, but the Herfindahl Hirschman index, where basically it's like an index to kind of, it's like a metric to show the concentration of a portfolio. Well, you can use it for a portfolio. I think it's typically used for actually um, determining how concentrated a market is. So if you have different companies, let's say different, I don't know, gas companies, and you have one that holds 50%, one holds 10, 10, 10, 10, you can see that it's very highly concentrated in that 150% portfolio or that 150% company. So the HHI, it's actually going to be higher. And you can kind of see that here. You can see low concentration is between 1 and 1500, and then 1500 to 2500. You have moderate and then above that you have high. So I did run these numbers on the portfolios. Both of them, so technically the BF one does have a higher HHI, but funny enough, they're both considered moderate. They're they're not enough to be considered highly concentrated. So yeah. But anyhow, that is all I wanted to go over. So hopefully this tracks well. Because that'd be really cool. If you can see here, actually, if I go back into this back test here, I go to the simulated tab and go just scroll down. You can see the trailing. Actually, yeah, the trailing 1 month. You can see they're actually pretty close. Same here with the 3 month. So, and actually, let me do just 1 year. We can see with 1 year the cumulative is 38 versus 48. But yeah, overall, they are obviously similar. There's a lot of similarly used signals in the two portfolios, but technically, Rain's concise EM signals does outperform the BF portfolio that I created, which I'm not upset about. Actually, it's a really cool thing. If that were to outperform the portfolio, I will probably put all of my eggs in that basket just due to how well it performs. Now, obviously, there's some other tests that I have to do, such as like a Monte Carlo test and whatnot, to determine whether or not this is overfit. I kind of looked into that, and it seemed maybe a little bit overfit, but I have to kind of look into that a little bit more. But overall, I'm excited. We've been doing pretty well. If we go back to that portfolio tracker spreadsheet, where we were up 5.71% for October, which is pretty crazy for the total portfolio. So if I go into here, so year to date, we're up 12.67%. Technically, that's not year to date, actually. That's since May 19th. But overall, not too bad. I think we're getting better and better. So obviously, we did have a pretty bad month on Composer in May specifically. That's bringing this down. If we were to just take out May, would be at 12%, where Spy would be around 14. But one day we'll beat it. One day we'll beat it. Hopefully. I don't want to be spending all this time and we don't beat it, but we'll see. You can see from the if we just do this last month basically, our CAGR shows around 82%, which is pretty cool. Just on Composer, and Spy is shown at 30%, but that's pretty selective, so I don't really want to look specifically at that. I'm hoping we can just kind of, not have to switch again, because every time we switch our portfolio, it's very hard to track how well it's actually done on Composer. Now, obviously, as a whole grand scheme of things, it's easy to track, but to get like symphony specific individual stats, it's a little bit hard to track once we rotate into a new strategy. So, but yeah, guys, that is it for me. And as always, I wish you guys a well to future.